to the Risk Factor podcast, powered by the Singapore College of Insurance, where we explore trends, tensions. Today, I think we're exploring some tensions and transformation in the shaping the future of insurance. I'm your host, Shalini Pavithran, and we're going to be diving into a topic that sits, I think, at the heart of insurance as it continues to evolve. And I think the topic for today is beyond policies and premiums, rethinking the insurer-risk manager relationship. Maybe just a little bit of backstory. I was having breakfast with one of our guests today, Steve at Sarni's. Thank you for introducing me to Sarni's at Teluk Ayer. Excellent recommendation. And Steve was telling me about whether insurance is dead, in terms of talking about the relevance of insurance and all that. And that's what brought about this conversation that we're going to have today, about how insurers need to evolve, the expectations of risk managers today. And I think joining me today to unpack this discussion, we have Mr. Ronak Shah, CEO of Wholesale Markets Asia for QBE Insurance, formerly the president of the General Insurance Association of Singapore and board member of the SCI. And, we're going to miss you, Ronak, as I mentioned. Welcome back to the Risk Factor podcast. We don't have your twin, Aaron. Okay, but it's good to have you back.
Thank you.
And Steve Tunstall, I think no stranger to podcasts. He looks cool as a cucumber. Sitting here today, although we have this fake fire here. We are burning up. Steve looks damn cool. Okay, director, co-founder and General Secretary of PARIMA, the Pan-Asian Risk and Insurance Management Association. Steve, it's really great to have you today.
Thank you. It's a pleasure to be here.
We were just talking about how Steve is going viral, such a celebrity, just walking by the beach and he's got 6.7 million likes. I mean, I don't know how you do it, Steve, but I hope, some of that is going to rub off on us today. Okay, so let's set the stage today, okay? I'm sorry, I've got a sore throat. I'm sorry, I apologize for this. Okay, let's start with big picture. The risk environment today looks very different than it did in the past. Organizations are managing not only physical risk, but they're also managing operational exposures. And we see, from a digital perspective, reputational, geopolitical, systemic risks. And that can be harder to define and manage. Now, for you, Steve, from a risk manager's perspective or risk management perspective, what has changed most fundamentally in the risk environment, say, in the past decade?
It's a great question to start with, Shalini, to sort of set the stage. And thank you very much for having me on the podcast. I really appreciate it. I think, long story short, everything has changed. We've gone from what you might consider a stable global world order to one where we now have jostling superstates, especially here in Asia. This changes everything for the C-suite in your business. And it changes every risk that you're looking at. So you couple that geopolitical move, you couple that with the climate change issues, which climate change is a real thing. Things are getting worse, things are getting more difficult. And then you layer on top of that technology, AI, and we can deep dive into all of these later. But it all means that every big corporate in Asia, as well as around the world, is having to be extremely nimble all the time. And of course, risk managers are expected to be on the leading edge of this. They're expected to be advising the boards. They're expected to be guiding where is the next big thing coming from. So insurance is one part of their role in most cases. And they need backup plans. They need consolation prizes if it all goes wrong. And the expectation is that the insurance industry will keep up with that process. And it's not getting slower, it's not finished, it's getting faster. And risk managers are constantly expected to do more with less.
That's a good summary in a sense. I guess before you can even recover from one issue or calamity or whatever, the next one is already hitting you, right? So how, going to, based on what Steve has mentioned, Ronak, from an insurer side, looking at the pace, they need help, they need support from the insurance side. Now, how do you see, insurers responding to that and evolving in that climate, in the landscape that Steve talked about?
Sure. Thanks, Shalini. And again, pleasure to be here, again. And Steve, definitely pleasure to do this with you. Just echoing what Steve mentioned, this is a very timely conversation because the world of risk has changed materially. Pace is certainly a lot faster. Connections between risks are a lot more complex. Consequences can spread much further and much quicker than before. And in this kind of environment, and this is live, everything that's going on right now that we are seeing, geopolitical issues and so on and so forth, insurance cannot just be about policy wordings, premiums, and a claim check at the end of it. It is about relevance, it's about insight, and very importantly, it's about partnerships. So, to your question about where we, from an insurer standpoint, see the role of insurance evolving, there are a couple of points I want to make. So firstly, it has to go from pure risk transfer to a risk partnership. Just kind of echoing again what Steve mentioned. Historically, clients often engaged insurers mainly at the point of placement, or when a claim happened. And that is no longer enough today. You cannot afford to simply do it that way anymore. Clients want insurers who understand their business needs, the industry pressures, supply chains, digital dependencies, and very importantly, the strategic vulnerabilities that are there. Secondly, from being reactive to being proactive, right? Insurance has traditionally stepped in after an event has occurred. Again, whilst that remains very important, increasingly clients want help before the event happens as well. So, for example, they want better insight. They want data. They want better data. They want better scenario thinking. And they want better clarity around what resilience really means in practice. Thirdly, from looking at risks in location to understanding them that being very interconnected. So, for example, a cyber event today, we talk about this quite a lot. A cyber event today, it not only is the event itself, but it becomes a reputational issue.
Yes.
It becomes a regulatory issue. It becomes a business interruption issue. And in some cases, it becomes almost a directors and officers liability issue. You look at a climate event, for example, that can trigger a supply chain disruption. It can trigger operational downtime and definitely financial stress. So the insurer of today, actually, I'm not even going to say the future, the insurer of today has to be able to see risk in a much more connected way. So definitely, I would say the role of insurance is fundamentally changing.
I think to Steve and Ronak's point, about the role of being a reactive partner to a proactive partner and helping companies to bounce back, to be more resilient, better, faster, I think is becoming ever more important. Yeah. But just to ask, Steve, just to get your point, do you see that happening? Are companies ready, our risk managers, are they reaching out, or are insurers reaching out to companies to say, hey, tell me, based on what are you learning from the different incidents that happened? Do you see that happening, based on your experience?
Well, it's getting better.
Okay.
But we could do a lot more.
Okay.
So, this is actually one of the fundamental reasons we founded PARIMA all those years ago, was really to build that communication across the industry from all the participants in the sector so that we've got a vehicle where we can all communicate much more effectively with each other. So, and that's still a work in progress.
Okay.
Even though now we've grown so that we're right across Asia, we still need, a lot more people come and join us as risk managers because we need to have that dialogue. And there are always new people coming into the industry as well who need to understand what the challenges are and how they can be addressed. So if I cast my mind back to before we set this up, there's a real issue in terms of siloed knowledge, siloed information. I think these days we've got no excuse not to learn from each other, not to share from each other. The technology is there, the tools are there, the ability to communicate has never been stronger. We need to make sure as professionals that we use that in the most efficient way possible.
And I think I see insurers doing a lot more, I think, presentations to clients. Yeah. We see, I know we were doing a session, we did a claims forum recently where we were sharing learnings from different events. And we had property managers and they were like, this is excellent. These are the kind of things that we want to know. But I guess our focus has always been on the industry, but how can we do more for clients? I'm talking about SCI because our focus has always been about how do we share that knowledge within. But, there was real interest from risk managers, in terms of how can we share that learning out. And I'm sure the industry is doing that as well. Now, Steve, I know I think in our brunch conversation, you talked about how, the world is shifting. Companies are shifting from being asset heavy to asset light. And insurers traditionally were protecting the asset, insuring the asset. So that has changed, right? So many large businesses have moved away from that. And we see the value concentrated in risks such as data, technology, IP, brand, platforms, and services. So now that shift in a way has implications to how organizations think about risk, and also how the sector continues to adapt and provide value, right? So, Steve, how do you see that business model changing, and how has that affected the way you think about insurance and how resilience and risk? What's your thoughts there?
It's a very important point, and I don't think we talk about it enough as a sector. I mean, when I was first working as a risk manager, and it's so many years ago, I don't want to put a number on it, but back in the day, every large corporation, not just in Asia, but around the world, they probably owned their own head office. If they had factories, they probably owned those factories. If they then made goods, they would deliver those goods with their own fleet that they owned. The CEO's car was a company car that the company owned, as were all the other vehicles in the business. If you look across how that sort of organization came together, the assets were the physical assets were a fundamental part of the balance sheet and were critically important to the CEO and the board, and of course the shareholders. So thinking about that from a risk perspective, I would probably say, and this is a generalization, so you can't always lever it, and it doesn't necessarily today apply in the same way to all businesses, and I'll come to that in a moment. But if I was a risk manager in that sort of company, I could maybe get almost 50% of my risks on my risk register insured. Because there was some facility, some possibility that linked through that physical asset to get the right protection in the right place. If we wind our way through to today, and you look at most of the large corporations again in Asia, unless they're a specific property play like a REIT or a property developer or a construction company, but even less so in some construction companies, the overwhelming majority of those physical assets are now owned by others. So most companies, even the largest corporations these days, actually don't own any of their offices. They rent their offices because they don't see that as their core business to own the office. Likewise, even very sophisticated manufacturing companies don't actually do any manufacturing. There's the old adage that Nike never made a shoe. It's always someone else who makes the shoes for them.
And then they stick the label or whatever. Yeah.
So they get the company to put the label on too, because that's all part of effective subcontracting.
I think luxury goods, I think they put the label in a bit later. Okay, all right.
Yes, exactly. We can talk at length about the labels, but it's not 99% of the value. And then I don't think people own vehicles anymore. These are all fleets. They're rented. They're long-term leases. They're things like this. Supply chain is mostly outsourced. You want everything just in time. You want it arriving. So what's happened is that the physical assets as a proportion of the value the company has on its balance sheet have dwindled very substantially. Now, at the same time, other non-physical assets have grown in value almost disproportionately to all of that. So these days, it's all about your technology. It's all about your people. It's all about what does your business actually do that differentiates it from its competitors. And then linked to that are all the liability issues around that. And I'm using liability in its broadest sense of the phrase here, that everything that might go wrong connected with your business then becomes a much softer issue, not a hardware issue, almost a corporate software issue. And the reality is, whether we like it or not, and I don't like it, the insurance industry has not kept up with this. The insurance industry, and I'll be controversial here, is still full of underwriters saying, well, if I don't have 100 years of data on the property values, blah, 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 you're uninsurable. Now, what that means is that risk managers today, when they put their risk register together, might find 10% of their risks are insurable. And I've had that conversation with the CEOs of some very big insurers who say, yeah, that's probably what we're finding from our clients as well. Now, what that does is not only does it mean that insurance is less of a play for the risk manager, it's much less important to the board. And if insurance does not look important to the board, guess what? It gets delegated down. And suddenly you don't have a full-time risk manager running your insurance program anymore. It's a second assistant officer in procurement. Or it's someone in treasury who's got a few hours left over. Oh, go and buy the insurance, please. And what this tends to do is it devalues the whole risk management process.
Correct.
If insurance is the anchor on the way that companies are looking at risk management, and it is for many companies in Asia, the insurance is the bedrock of why they have a risk management team. If that's perceived as increasingly less important, then you get an undervaluing of the whole risk management process, which I think is tragic for these companies. And then we see situations where you look at a lot of technology companies today, and the risk management has almost gone away in the form that we understand it in terms of looking at those broader risks facing the business. And you end up with rather narrow definitions around trust and safety.
Okay.
And then they say, that's it, we're doing the job. And then you say, what about insurance? We don't need that.
Self-insurance is captive?
They don't need insurance. It's
Okay.
not relevant to their business
Okay.
model so far as they're concerned. So you can see a trajectory here that unless the insurance sector as a whole really grasps the metal on this, it's going to be increasingly less relevant to more and more of the world's most dominant and biggest businesses.
Okay.
And that I find quite scary.
Scary, yeah. Ronak, this looks like almost like a debate of sorts, but it's okay. I think both Steve and you agree in terms of how
Yes.
important insurance is.
Yes.
But how do we get people to see it differently? But so for Ronak, based on what Steve is talking about, how exposures and risk are moving, right? How it's evolving and where or value, exposures and value where it now lies. How now are insurers evolving? To Steve's point, we don't have a product. Is that true? I mean, how do you look at it?
Steve and I have been having this discussion for years in terms of where we feel there are areas that the insurance industry can improve on. We always look at it as a product, and we were always looking at it as legacy data and physical assets. And I completely agree with Steve. It's not a controversial statement. It's actually a fact. And it is an area where the insurance industry absolutely needs to change and go down the path of offering solutions, and solutions to risks that are a lot more interconnected and a lot more intangible. It is indeed not just entirely about physical assets, and physical assets certainly will continue, and you do need to price those and you do need to provide protection for that. But these days, that enterprise value sits in things like data, systems, IP, intellectual property, platform brands, customer trust, and human capital. So where we as an insurance industry really need to kind of perhaps up our game is to, number one, think about developing new products and solutions, coming in with different modeling approaches, for example, and frankly, having an open mindset. If we try to conform to a box, and that box is based on legacy information and legacy data, then we're not evolving quick enough. Again, I go back to cyber as an example. It's an obvious example in which the industry has had to evolve and continues to do so. But even if you kind of expand beyond cyber, the conversation today is a lot more about contingent risks. It's about non-physical triggers. It's about ecosystem dependencies. And it's about the resilience of intangible value, right? So the real test for us in the insurance market is, can we continue to provide relevance as the nature of enterprise value keeps changing? And the answer has to be a yes, because there is no other option.
Yeah.
So what this means is that the industry has to keep adapting. We have to keep learning. And that's where, again, with partnerships with SCI, for example, here in Singapore and across the region, it is important that we test ourselves and we bring these discussions up, and more people talk about it and they try and act on it. And in certain cases, we need to rethink a lot of the old assumptions. So, for example, if I were to take one step further, I think future solutions are going to become a lot more tailored. They have to become a lot more dynamic. We need to be quick, nimble on our feet to be able to evolve and change. And they have to become a lot more integrated. One size is not going to fit all.
True.
So, for example, there has to be a lot more modularity. There has to be a lot more blending of insurance capacity with things like analytics, advisory, engineering, claims support, claims advocacy, and in certain cases, alternative structures. So, and that's where I feel the partnership piece becomes a lot more relevant in all of this. That discussion with a risk manager, that preempting, that and it's not about meeting 2 or 3 months before a renewal. It's about having an ongoing discussion.
Yes.
It's about things like roadshows. It's about what PARIMA is all about. So, we're not here trying to promote anything. We're trying to bring the industry together to where it really has to be in order for it to continue remaining relevant. Otherwise, we really run the risk, as Steve correctly pointed out, from the risk manager's side, the buyer could go down the path of not needing that anymore, which then automatically has a cascading effect of not needing insurance capacity or protection anymore.
Yeah.
So absolutely, I agree.
Is it a question of capability? The fact that, Ronak, you mentioned that, we're slow to evolve and we got to think about it differently. Is it an issue of capability, or is there something else?
I think old habits do not change. And we need to challenge ourselves. We are so comfortable in our positions and in what we do as an industry that it just kind of rolls year and year and year again. And so it's important that we challenge ourselves. So I don't think it's entirely a capability thing. I think it's a mixture of many things.
Okay.
No, I agree. I don't think it's capability at all. I think there's immense depth of knowledge and capability in the insurance sector. I think there's a particular challenge in Asia. In Asia, large corporations are growing very quickly and have been forever, so far as we're concerned, because of our career lengths. When your corporation is growing extremely quickly, insurance becomes less of a critical backstop. If you're let's be blunt, a European business or an American business and you're growing at 1 or 2% a year, a thump on the balance sheet means you need insurance so you can top up back that 1%.
Correct.
If you're an Asian business and you're growing between 5 and 20% a year and you lose 5% because a factory burns down, it's like, well, no matter, we'll make it back in 3 months. Who cares? Let's move on. Not who cares, but more or less. It's a speed bump. It's not a dead end in terms of the business model. And I think you've got two things that are sort of bumping at the same time here. So Asia is the powerhouse for the world now. That's well established. We're growing faster. We're doing more than ever before. But I would say that our insurance industry is still very much looking to London, looking to New York. They're looking to say, well, that must be where the best practice is. Actually, it isn't anymore.
Okay.
It isn't. The best practice should be here in Asia, and we should have the confidence to build what we know our Asian customers need and what they're crying out for. Because quite frankly, if we don't do it, no one else will. and therefore that market will be less served in terms of its risk management capability and solutions.
That's exactly why we do this podcast, why we do a lot of market presentations, because we feel the expertise for Asia lies here, and this is why we want to showcase experts like you, Ronak, Steve, and many others, because Asia is different, and there's a lot that we can learn from this side of the world, and very true. But Ronak, to what Steve was saying, as well as what we were talking about, how the risk is evolving, companies are evolving. What then is the future of insurance, say, in 3 years or whatever? What do you think? In terms of solutions, partnerships, how we're going to be working, how the industry is functioning, how, underwriting is going to be. What do you see?
It is improving, that's for sure. And it is becoming a lot better, a lot quicker. I think we're being tested with different scenarios and real-time scenarios every day. And as a result of that, we do have to shift the goalposts quite a bit. Like I said, awareness sessions like this, certainly what we're going to talk about a little bit later in terms of technology and AI, and the quality of the analysis that this data can present to us is allowing us to really craft new solutions, or at least work towards that a lot faster. The industry is a lot more interconnected. So it's not just about a single insurer. It's about how the marketplace tries to evolve. It's about the reinsurance market. It's also working with the intermediaries. It's also working with other partners like risk managers, lawyers, so on and so forth, loss adjusters. So the entire industry, and particularly I would say AI, and to a large extent even COVID, has really changed the landscape quite a bit.
Okay.
So I would say, hopefully in the next couple of years, in fact, sooner, hopefully here in Asia, because, to your earlier point, the expertise does sit here for most parts. The turnaround time, the responsiveness, the capacity of the insurance market and the reinsurance market, it's all here. Of course, there are occasions in which we do need to work with our counterparts in London or anywhere else, but we do find for most parts that the industry has the ability to basically craft its own destiny here.
Okay, very good. So let's move from the future to expectations. Okay, so let's try to understand in terms of what companies, risk managers expect. What do you think Steve, to you, right? What do they most value today from their insurers, in terms of, it's not just the traditional looking at coverage and claims. What is it that today they most value from insurance or expect from insurers?
Risk managers have got problems. They need solutions to the problems. And that's it in a nutshell, really. So if I'm a risk manager and I've got problem X, I need to know that I'm going to get some solution to it. It probably hasn't been created by me. It's probably the board saying, this has come up as a red flag. We don't want this sitting on the balance sheet. What can you do to solve this issue?
Okay.
And I think this is where the challenge starts in some of the dialogues, because that dialogue can take a very long time sometimes before the sector as a whole says, now we've got something. Or it can take a very complex and expensive process of evaluation of whether the product can actually be given to that company. I mean, there's a lot of different moving parts in that, but what the risk manager really wants is convenience and the ability to go quickly back to the board and say, yeah, I got you covered. You asked me for this at the last meeting, at this meeting, we've got this. It doesn't do that, it doesn't do this, but it does most of this, and we can satisfy ourselves and the risk committee that we've got this covered. That's all risk managers need. They don't need I must have 20 new products.
Correct.
Or I must have some amazing thing that's all singing and all dancing. I need help with the problems I'm facing today.
Going back to what keeps risk managers awake at night, and how do we solve those problems for them, at least some of those problems for them, and take the load off for them. So how do you see insurers helping to take the load off for risk managers?
I go back to what Steve mentioned earlier. Actually, the expectations are quite simple. And it's amazing how we as an insurance industry sometimes don't look at the simple requests, but sometimes kind of look past them. So firstly, I would say definitely clarity. expectations of risk managers. So I've got 5 points. First, I would say definitely clarity. Clients, in discussing with risk managers like Steve, we've heard over the years, clients value insurers who are very clear on things like appetite, on things like coverage, on areas, even if you're not going to be able to cover it. So on exclusions, for example, clear on your capacity and very clear on your claims philosophy. So, and in a complex world, clarity is a real competitive advantage. Secondly, responsiveness. Steve mentioned that earlier. When risk issues move quickly, clients cannot even afford to wait for sometimes even days, let alone weeks for direction. They need insurers who can engage quickly, think commercially, and definitely make decisions with conviction. Very important. Thirdly, risk managers are expecting a lot more insight from their partners, from their insurance partners. So good insurers do not just simply provide paper or capacity or cover, they provide perspective. It's a debate, it's a dialogue, and this has to happen continuously through the year. They should be able to help clients see things like emerging trends, understand things like accumulation on their risk profiles, and think ahead in terms of things like vulnerabilities that are coming their way. Fourth, consistency. Trust is built over time. It takes time and takes a lot of work, time and effort to build it. So consistency is very important. Clients do value partners who behave well, not just in the good years, but during the tough times as well, when market conditions change. So how an insurer really shows up in a difficult claim or a hard renewal, it tells you a lot. And risk managers will remember that. Finally, a real partnership. A real partnership. So by that, what I mean is listening properly, understanding the client's business in depth, being willing to solve problems together rather than simply taking positions from across the table. So at the end of the day, clients, they simply care about a strong security, meaningful coverage, and claims payment. So, I feel that these are some of the 5 fundamental, sound very basic, but a lot of times get looked over. Areas in which perhaps the insurance market has work to do. And if we can get this right, you have a real partnership at hand.
Yeah. So Steve, to the picture that Ronak drew of how that partnership should look like, does that picture seem the same for you as well in terms of how insurers and risk managers could partner well together?
Yeah, I think I agree with everything that Ronak said in that 5-point summary. I thought that was quite helpful to get all of that. I guess the issue is sometimes you get all of that and sometimes you don't.
Which one do you think most often gets missed?
I would reframe that and say what happens is one of them gets undermined, and that's trust.
I see.
So if some of the other bits fall down, then you worry about the overall trust relationship.
So the 4 impact the trust.
Yeah.
So like if you don't show up consistently, it affects trust. You don't show up quickly, it affects trust.
So a simple example, I love doing claims workshops.
Okay.
If it's a big risk and it's a complicated risk, I want to know now what will happen when we have a claim.
That's true.
I want to work through a scenario and say, well, if this happens and then that falls off and then this breaks and then he dies, are you going to pay for that bit? Yes, no. Are you going to pay for this bit? Yes, no. And I really don't mind if the answer's no, because then I understand what the scope of my policy is in a way that I didn't before the workshop.
Correct.
Then we have a conversation about, okay, if this bit is a black hole, I can either go back to the board and say it's a black hole, beware, or we can discuss how we try and fill that hole in when it comes to renewal. And if that costs a little bit extra, then I can go back to the board and say, we had that black hole. I've got a solution.
Yeah.
Do you want to pay the extra? If it, and that's going to be X per year forever to fill it, or are you happy with that sitting on the balance sheet? That then means I can have a sensible conversation with the directors and give them options, and that's all they want. So it's not, I don't want to be in the situation. The converse is if I say to the insurer, can we work through the claims? And someone says, no, everything's going to be fine. And then something goes wrong,
Yes.
then I'm in the reverse position. Instead of looking great in front of the board because I'm
yes.
finding solutions,
Correct.
I'm going back with my cap in hand and saying, well, we had that insurance. It hasn't responded.
That's true. Yeah, yeah. But I know that a lot of insurers, I know brokers were saying, I think we did a podcast, with a broker and loss adjuster, Clarence and Tanga, and they were talking about how they do these claims simulation, like if something happens, okay, what's everybody's role, what happens? Do you, for example, that claims workshop, is that something risk managers do more often, or is it insurers inviting risk managers to do? Because that sounds like a really good way of approaching.
I would say that the best risk managers with large complex risks want to know this information. Whether they have the time to trigger it themselves every year is another matter entirely. Because most risk managers I know are just completely rushed off their feet at the best of times.
Okay.
So finding an extra time to remember to do it is a problem for the risk manager. So I would definitely encourage insurers to go to the risk manager. If you've got a particularly large client and they've got a particularly complex solution that you've put in place, I would definitely encourage the insurer to have that conversation with your risk manager. Would you like to work through this?
Is this something we do, Ronak?
In bits and pieces.
Okay.
I think to Steve's point, it's in bits and pieces, and sometimes it's reactive, as I mentioned earlier. So, bringing that 360 approach in your continuous dialogue with the risk manager is very important. And it's about claims advocacy, and it's about underwriting emerging trends and everything that comes along with it. Arming the risk manager with the relevant information, trends, and insights, as Steve mentioned earlier, will make it a lot easier for the risk manager to put out the solutions to their board. So
we talked about that partnership. We looked at expectations. Now let's look at the sort of like the volatile risk environment, right? So we're seeing risks are more interconnected. It creates both challenges and opportunities for both insurers and risk managers, and forcing everybody to work together closely. Now, what, Steve, do you think, is today's emerging risk that's going to have the greatest impact on how organizations think about resilience?
It's difficult to pick one.
Okay.
Because this is the most complex landscape of risk that I've seen in my whole career. There is massive potential problems out there, and there is also huge opportunity. So this is genuinely an amazing time to be in the risk profession. If you can stay on your surfboard and keep surfing,
That's
okay?
True. Yeah.
And you have to. The three, if I can take reference to the data that we collect from PARIMA, probably the three general biggest buckets of risk I've sort of alluded to already. We've got the whole geopolitical, everything's moving, all current relationships are sort of up for negotiation on a country-by-country basis. If you work for a large international corporation, that plays into every aspect of your business.
That's true.
Whether it's, if you're building an asset that's got a 30-year lifespan, do I build it in Vietnam? Do I build it in China? Do I build it in India? Do I build it in Texas? Where do I build it? That's changing almost on a daily basis at the moment, depending on where your loyalties lie. The volatility around that then affects everything to do with your supply chain, your logistics. Should I have multiple supply chains? Should I have backup? Should we shorten the supply chain? Should I be onshoring, offshoring, nearshoring, farshoring, whatever you want to do? All of that complexity comes out of the geopolitics side. And then you layer on top of that what I would just generally call the climate change risk. And of course, you drill down into that, you've got, here in Asia, we've got over half the world's population. Probably over half of that half, so around 2 billion people, live on the coasts. We know sea levels are rising generally, so whether it's where your employees live, whether it's where your factories are, whatever, they're facing a potential risk of changing sea level. We can see climate changing all the time. We're having unprecedented firestorms, windstorms, everything you can think of. Literally, I've got someone who works with me has just had to move house because their previous location was getting so many floods, it was just no longer impractical to live there.
Yeah.
This is real day-to-day stuff that affects companies right across the region. It's very much, I think, that Asia is more exposed to this than anybody else. So then, do I have stranded assets? Do I have assets that are going to be a problem in the future? Linking all that in as well. And then, of course, the third one is probably the most fundamental, and that's technology and AI. And we're going to have some questions about that specifically later. But you can see how all of these things mingle in together. There's no gap between these things. They're highly correlated. And if you miss a part of the story, you're really not doing justice as a risk manager in bringing that information to your board.
Yeah. So looking at that, right, it's a scary world. Scary but exciting, as you say. There are challenges, but there are opportunities as well. So how are the insurers responding to that?
Sure.
Are they unlocking those opportunities? How are they supporting risk managers through this?
Yeah, I guess the question is, how are we staying relevant and how are we staying valuable? And to add on to Steve's point earlier, before I answer the question, is that it's corporates and the boards are fundamental in all of this, but it's also now becoming about communities and countries, right, and governments as well. Insurance traditionally was always a source of protection that was known to corporates and consumers. And a lot of times, countries kind of dealt with whether it was natural calamities or any other geopolitical issues that they were having by themselves. But insurance is actually becoming a lot more interconnected, even in providing coverage for climate change events that's happening to Singapore, for example, or to ASEAN. So it's becoming a lot more relevant in many different ways. But I think to answer the question, firstly, the insurance market can stay relevant by doing two things and doing it well and doing it at the same time. Number one, the fundamentals need to continue. And what I mean by the fundamentals we need to do exceptionally well, one is things like underwriting discipline, contract certainty, claims delivery, capital strength, technical expertise. Those are non-negotiables. They absolutely have to be done very well. Secondly, it has to evolve with the client in terms of the risk landscape. So, for example, if a business is worried about cyber, the insurers have to be credible there. If a business is worried about climate, insurers have to be relevant there. If a business is dealing with geopolitical issues, supply chain risks, shifts, AI-related uncertainty, for example, regulatory complexity, the list goes on. Insurers, we can't just stand still.
Yep.
We have to and speak that old language that we were talking about earlier to a new problem. It just doesn't link up. So this is where I feel that relevance comes from being honest and about what insurance can and cannot do. So we all know that not every risk can be neatly transferred.
That's true.
Right? And so some of them have to be reduced, some of them have to be shared, some of them have to be retained, and some of them have to be financed differently. So this is where I feel, in order for the insurance market to be relevant and valuable, good insurers need to help clients think through all of this constructively.
Very true.
So, and perhaps most importantly, relevance will come from staying close to the client, constantly being in touch. Because volatility, the thing that volatility can do is that it makes people retreat. What happens is that we then simply retreat into things like technicality. And so it is very important that if we want to build a partnership, we want to stay relevant and valuable, a number of these things do need to be carried out.
So you've got to be brave about this, right? And have that open conversation, I think, with the risk managers. Very good. And I think to the volatility, and I think, Steve, you talked about the impact of technology. And I think we cannot say enough about how that is, and in terms of data, technology, and AI today, right? So these are shaping underwriting, claims, analytics, client engagement, every different part of the whole insurance value chain. Now, how decisions are made, how relationships are built. Now, Ronak, where do you see, right, data, technology, and AI creating the most meaningful impact opportunities for the insurance industry today?
So I see it across the entire value chain, firstly, to start that off. But there are 4 areas where I especially see this playing out. So firstly, better risk selection. Data and AI can definitely help us assess a number of these exposures a lot faster. We're already embedding that into many of our underwriting, many of our classes of business, and we're seeing tangible results in that space. And the human element is still quite actively involved. So contrary to thought that AI is going to subsume and take over, we are finding in a number of classes where the risk selection process is improved. But importantly, it enables and augments the underwriter, the thought leader, the subject matter expert to be able to make a better decision on what the risk should be priced at, for example. So we also find that data and AI can allow us to identify patterns a bit more intelligently, focus really human expertise where it really matters most. Secondly, it's making things a lot faster, right? So efficiency and speed. The insurance process can be too clunky. It can take days sometimes to assess a risk. It can feel too manual. And so this is where, in order to prevent it from being too fragmented, too slow, the efficiency and speed is improved with the use of data and AI. And we're seeing that again in areas like cyber, for example, in areas like property underwriting, in areas like price modeling, in areas like work injury insurance. We're seeing tangible benefits there from sometimes hours to minutes.
Okay.
So third, deeper insight. Better analytics can definitely help us understand things like accumulations, emerging trends, and interdependencies a lot more effectively than before. And finally, very importantly, claims and service. It's often overlooked. Even things like fraud detection. We find that AI has played a huge part in making those decisions a lot easier for us to look at. So claims and service do get often overlooked. And what happens then is that the issue is that clients definitely remember how they're treated when something goes wrong. So if we are overlooking claims and service, you already have a disconnect there. So this is where we find that data and AI can really play a big part.
How is that from a service standpoint? How are you seeing technology supporting that to provide better service to clients?
So even things like, say, in policy issuance, in operations, in reconciliation of, say, for example, premium payments that have been made, a lot of that middle to back office areas, which are also done by humans mostly, we find that data and particularly AI, even things like machine learning, even things like RP, robotic process automation, it has sped up the process.
So speed and efficiency is where you see, okay. Steve, from a client perspective, right? So where do you see clients value most, in terms of technology-enabled solutions, and where human judgment still matter? What do you see?
I think the fundamental thing is make my life easy, please.
Okay, we're going back to that.
Don't give me a long spreadsheet to fill in for my
10,000
cyber
documents.
policy.
Okay, yes.
When I can already see there's 150 questions there, and the first question is, what is your company name? I'm like, oh God, this is...
You can at least pre-fill that,
It's
right?
going to be one of those. I can see it coming. So I know I'm going to be filling that in for the next 3 hours, and it's going to be asking everything that's already on my website.
Yeah.
And you could easily have sucked the answers to 95% of the questions.
Okay.
Let alone, so this is just hygiene.
Okay.
This is not even, gosh, we've got technology. This is basic hygiene, guys.
I agree. I always say that the insurers ask for so many different things. I think we only leave out probably urine sample and blood sample, but we still ask name and stuff like that, right? Yes, I know.
Yes. And how tall is your horse? Actually, I don't have a horse anymore. Yeah.
What horse are we talking about?
This is where I agree. I mean, it's not about, we're not trying to beat down the industry here. What we're trying to really go down the path is, when you look at AI and data, and now really going down the path of agentic AI, here in Asia, probably this is the best ever time to be able to do things like sandboxes and really do, proof of concepts and really test the boundaries in which we can make the life of the risk manager easier.
Yes.
A lot of those things that Steve has mentioned is...
Stop asking how tall his horse is.
Yes. So it's there for us to do it. And
Okay.
Now, that's before we actually get into the proper use of technology. So how many insurers have got client-tailored APIs that actually can communicate with the client's systems in a way that the client's IT team will accept. Because the overwhelming majority of the biggest corporations in Asia will not let you on their plot. You're not allowed on. So how are you going to suck that data in an intelligent manner when the company CIO and CISO are saying, sorry, you can't do that. You're not allowed inside. So what are you going to do? How are you going to suck that information in a way that you could then go back to the risk manager and say, don't worry, I've done all this for you. I've got all the answers already. I just need to clarify a few final points, human in the loop, of course, which will always be critically important. But we've done all the donkey work. I've done all the compliance work. Everything is cleared from a regulatory perspective. Everything is cleared from everything else I need to do to deliver the policy apart from these last few clarifications. And the risk manager will go, wow, you're great. This is cool. I'll talk to you again.
So, to that point, right? So building on that point, I think, how do you distinguish insurers and insurers that risk managers most want to work with? So that's one. Make my life easy, tailor your solutions to me. Don't give me something off the shelf. And then I've got to figure out how I'm now going to think about this from my business standpoint. These questions are not even relevant to me. Why are you asking? So how do you see, what does that really great insurer look like for you?
We've talked about claims. That has to be something that I feel is going to be resolved in a sensible, pragmatic way. But I have to say that relationship thing, make my relationship with you easy, is overwhelmingly the most important thing. Can I do business with you, or do I feel that I'm sort of entering a computer says no zone? Because I don't have the energy all the time to do that. This is one of many policies I'm trying to design and place. If it's a new policy, it's one of many other commitments I have internally to my organization. What I need is a sensible pathway that gets me to a solution as fast as possible. It's not just make my life easy. It's that I'm using that as a way to capture the essence of what I need.
So what do we need to do, to make sure that the insurance proposition continues to remain relevant, trusted, and differentiated, right? I think to Steve's point, what do we need to do?
Yeah,
is that day coming, as we evolve, is that happening sooner than later? Is it going to take time? What needs to change?
Yeah, I find that the entire ecosystem is shifting and is enabling that, and starting with the regulators that we have as well in most jurisdictions that we operate in here in Asia. We're finding that they're becoming a lot more aware of the shifting landscape. They are keen to enable the marketplace, and in fact, they are really pushing us hard to be able to adapt and change things a lot quicker. They're giving us all the tools in terms of using the data and the technology there. So, where I find, and when we use the word future, this doesn't mean 5 years, 10 years from now. This has to be, in fact, from now on, now, current. So, and Steve alluded to this a few times. Number one, being technically strong, being commercially intelligent, and very importantly, being relationship-led. So when you look at technically strong, again, I mentioned those as the fundamentals: deep underwriting expertise, discipline, consistency, and very importantly, the ability to pay claims with confidence. Commercially intelligent, means understanding the client's world, not just the insurer's model. A lot of times, we start the discussion more about ourselves when actually we need to understand from the get-go from the other side. And really what that means is appreciating the pressures that the risk managers are under, their growth ambitions, that the board is kind of putting onto the business, operating realities, and at the speed at which they expect decisions to be made. And relationship-led really simply means showing up as a partner. I find that if we can really keep to these three fundamental values of being technically strong, being commercially intelligent, and being relationship-led, you're going to have an insurer that is a lot more resilient, a lot more robust, and very importantly, the right kind of partner that the risk manager would want to have.
Very good. So I'd really moving away from just, looking at it from a product or platform perspective, but really how the industry or the sector actually supports resilience, trust, and long-term partnership. I think that's really the key to a long future in this relationship that we're in. So now lightening it up a little bit, a quick fire round that we're going to have. I think Shubi calls it the risk light round to both of you. Okay, so let's say one word that defines the future of insurer risk manager relationship. One word. Steve.
For me, it's trust.
Very good.
I had exactly the same word.
See,
and we didn't plan this before.
This relationship is starting off really good. Okay, not starting off. I mean, it's not a start. Okay, but one risk trend that the sector should pay close attention, or maybe even closer attention over the next few years. Steve?
AI is going to radically change the shape of every one of your client organizations this year. You must keep up.
Okay, Ronak, what do you say?
I would say interconnectivity.
Okay.
Right. Risk trends are, it's a lot more interconnected. So, yeah. Okay.
All right. Okay. One thing that clients value most in a trusted insurance partner. Okay. Steve, to you?
Pay me the money quickly.
That's it?
That's a great solution. Okay. If I know you're going to do that, I can forgive a lot of sins along the way.
I see. Speed. Okay. What do you think, Ronak?
I was going to say reliability.
Okay.
It's sort of the same,
but
it's all interrelated.
It's much more polite.
Yes. Yeah, exactly. You're right. Okay, one quality that will define the most relevant insurer of the future. Ronak, you start?
You go first.
Adaptability. Being able to adapt.
Okay.
Implementing AI faster than your clients. Seriously.
Really?
Yeah.
Okay.
Yeah, it's true.
Okay. I mean, they are doing, I guess, but you're right. Maybe not fast. Okay, to your point. Okay, I will concede. Okay. All right. Okay, we've covered a lot. I think we've covered a lot today. I think we've covered everything today that we wanted to talk about. Any final things that you wanted to just get off your chest while you're here? And then I'll go to Ronak. Anything that you want to say?
We have no idea how fast the business environment is going to change imminently. We're falling off a cliff of change. Arguably, insurance could be the slowest sector to recognize that they don't have a parachute.
Okay. Ronak, what do you say to that?
No, I agree. I mean, we have shifted well past policies and premiums. Yes, the fundamentals of underwriting and claims will always matter. But as we have mentioned a few times today, clients are looking for the understanding, the trust, the partnership, the insight, speed, clarity, and really just genuine partnership at the end of the day. And the good thing is that all of this challenges us to be better. We're not just sitting down and doing nothing about it. But in order for us to be a lot more connected with our clients, more aware of the world around us, we have to be more ambitious, and we have to try and do that. So I am optimistic. I do feel that this will be a lot sooner than a couple of years from now. I completely agree with Steve that AI has to be, the organization or the part of the industry that embraces and executes on AI as quickly as possible and in the right way across the entire value chain will not become irrelevant. Let's put it that way. Because when you look at the big tech, you look at the hyperscalers out there, you look at the rest of the world out there, they can easily make us irrelevant.
Very true. Thank you again. I think we've covered a lot of ground today. I think we moved from how the business model is changing, the environment is changing, the need to be, I think, to Ronak's words, relationship-led. How do we help lighten the load on risk managers? How do we get front and center into bringing AI to help us faster than the clients? How do we respond, provide data and insights to clients so that they, especially to risk managers, so that they look good with the board and they look like they are on top of things. I think that's really important. I remember one of my bosses telling me that I only have one job. My job is to make my boss look good. So similarly, right, for risk managers, how do we make risk managers look good? They look prepared. They look that they know what they're doing to their boards, and that's where the insurers play a great role. And I think as the risk continues to evolve, so does again the opportunities are there. While it's challenging, but as Steve gave us, it's either the toilet or off the cliff. I don't know which one is worse. So I don't think we have much of a choice but to adapt and evolve. And I think that's really exciting times. So it's which kind of a company do we want to be, or a sector that we want to be, right? Do we want to be the sector that's headed without the parachute, or do we want to evolve? And I think the times, ahead, the future is exciting. How can we help clients build resilience? How do we make sure that we provide long-term value and continue to stay relevant? I think is really key. And again, I just want to thank Steve and Ronak. Steve, first time, Ronak, second time. Thank you both for joining us on the Risk Factor podcast, and for sharing your honest feedback. I think it was in sometimes I know Steve, you like to be controversial. I wish we had a beach, or maybe an image of a beach that we could then walk along the beach. I know that's something that you do really well. Okay, maybe some of our listeners might not know, but if you check out Steve's TikTok, okay, he's got this walking by the beach where he talks about chickens that fly in Asia as opposed to other parts of the world. We don't have a chicken, we don't have a beach. Okay, we have this fire, looks normal, but okay, never mind. No one in Asia has a fireplace, but never mind. It's something new. Okay, so our listeners, thank you again for joining us. I hope this conversation sparked ideas, maybe, brings about conversations in your own organization, and how I would say you look at the relationship between how we add value to that relationship between insurers and risk managers, as well as how you adapt to AI. I think we have done a lot of work in this space. How do we help build capacity for insurers through different trainings, solutions, talk to us. There are also other providers out there. There's such an exciting time. There's it's the age of information. There's so many different solutions out there to make our life easier. Now, how do we capture that and leverage that? And I think that's really important. So if you enjoyed this episode, do subscribe to the Risk Factor podcast. You can find us wherever you listen to your podcast. And again, I'm Shalini from the Risk Factor and from the Singapore College team. Thank you so much, everybody. Thank you for joining us.
Thank you very much for the opportunity.
Thank you.
Thank you for having us.
Appreciate it.